Hey guys, let's talk about the bond market. Some pretty big moves today, so getting a lot of questions, which is understandable. But let's just start with, you know, let's do a top down, and we'll talk about long bonds because that's a position that we've been having, that we've had. Let's see. Okay, guys, so here's the long-term trend. This is 30s, right? 30-year Treasury futures. So we're still in an uptrend. Now this area right here, I mean, anything's possible in markets, guys, obviously. We don't need to know what's going to happen next, but there is a probability that we make a higher low here on the monthly. Um, so I am noticing that. I also notice here, though, that the 8's starting to roll over. So that's showing you a different trend. That's basically this trend here that's been going on in this direction. Okay? And then the bands are also down here with low support, kind of down around, call it 147, 146. All right, now look at the cycle here on the monthly level, still has more room to cycle lower. So this cross here was basically the top of the market, and we've been in this, as you can see, this is a longer term cyclical move lower that we've been experiencing. All right, now there's several different ways that you can play that, and there's other trends within this time frame, obviously. And let's look at that. Okay, so this area is key, so we're aware of that. All right, but what I really like, or what I'm playing now, is more on the weekly level. So I've been saying for a while, watch this 161 area. Okay, it happened to be the lower bands. It was this support area that held 3 times, and I'll go look in the morning at what that is in yield. The institutional guys that are trading the cash bond market, they like to know the yield levels. But like I always say in the model, when you break the bands, the next move tends to be there towards the 200 or even all the way back to pi, complete a pi cycle. So this is a lot of room, and just knowing what we know on the monthly cycle, there's more time for this to go lower. So I flipped and went course short today, and that was my game plan all along. That hey, well, we played a little bit of a long here, we made a little bit of money. I came in to the election just small long bonds, two contracts, or actually lightened up into the bounce um, early into the evening. Anyhow, so took a little bit of loss on bonds, and that happens when you break the TMS. So you lose a little bit sometimes here, but this is a long-term play. So there's you lose a little bit here, but there's lots of opportunities to make a lot more money when we're long 5 to 10 contracts, and we catch some of these moves. So that's part of trading. But anyways, from here, what matters more is I want to play this move. Okay. The cycle is kind of low. So, I mean, anything's possible. If this reverses and comes all the way back up, then you're kind of a monkey's uncle. But that just is what it is. Now look at this 8. That's your trend that's been going on the intermediate term. So if we look at that on the daily level, okay, so you guys can see this break, and then this is what's nice about the system is when you get these big breaks like we had in gold too, this is when you're going to get these types of flushes. So that's why I've been highlighting 161. It's the same thing. We basically broke pi. So this was the cycle away, cycle back, cycle away, cycle back. Now, the next cycle maybe, is going to be a cycle inversion where price can go lower into the top of the next kind of cycle. All right, so here, when we short here, I'm leaning short 10s, and I'm going to sell long bonds on a bounce. So because we're so oversold today, I don't want to go short 30s. I'd rather sell 30s about halfway back up this move, and I'll show you on the hourly what that looks like. All right, so here's the 4-hour. Here's the 4-hour. So this is the intermediate term play. I mean, if you've been playing this on the short side because you were playing pi that was rolling over like this, congratulations, you've been the better, you've had more alpha when it comes to the rates side. I mean, we shorted a little bit here, but these were pretty decent opportunities to play it from the short side. So that just is what it is. That's a different time frame. This was the intermediate term move, and then we've been playing bonds from the long side all year, more on this trend. You know what I mean? So this was a place for maybe we were going to start the trend back up, but who knows? Maybe this was the high in the market. There's a really real possibility that that was your top long term, right? Now, so on a more granular level, if you want to look at the hourly chart, all right. So I sold into this spike, and then when we broke 61 today, I just decided to kill my last two long contracts. So I lost money on that. And then let me show you 10. So the game plan, so in bonds, if we back, so again, now, you know, I like to play these walls. So this is your big bearish move down, right? You can look at this as one giant move. About halfway, you'll see the 30s coming in here. If we do get any type of bounce, I'm going to be shorting 30s into this bounce. Okay, and then I'll show you 10s real quickly. The way I'm going to play 10-year, you can see this is the start of my new core short. All right, and the same thing. From here, if we go lower, I make money. If we bounce, I'm going to sell 30s. And then don't forget also what helped mitigate some of our losses today when that big level broke in the 30-year is we've been short 5s for this entire intermediate term move lower. I've been playing it short 5s. So we were short 15 contracts up here. Covered was basically only long or short 2 or 3 down here. Resell, cover, reshort, cover, cover, resell, resell, resell. Brought my delta up. I don't know if you can see that. My delta was like 9, short 9 contracts up here. And then I covered, covered, cover, flat. I'm actually now long. Okay, so now I'm going long. But this is a 2 standard deviation regression channel, and this is capturing this entire move. You can see that if you were fast enough last night, this was the perfect spot to be selling 5s. So I didn't happen to catch that, but that was the right move. I mean, that just worked out beautifully. That's why I use this 2 standard deviation model. All right, so now I'm playing 5s long. It's reverse. So now I'm going to be short 30s and 10s. This being a minus sign, showing you that I want to be short, and then long 5s. Okay, where this was the opposite before long bonds broke. Before we were playing 5s short and long 30s. Now we're going to go short the long end and go long 5s. So from here I'm leaning a little bit long 5s. If we bounce, I'll take some profit on the 5s, and then I'll resell and beef up my short position. All right, guys. So overall, I mean, we made a lot of money on the euro today. Made up for my gains. Had a decent day, and then you know, we had some longer term breaks in the market. I'll do another video discussing some of the dollar and some of the other markets. All right, but hopefully that helps on bonds.